welcome to another great video. How much tax is owed when you pass away?
That's a big one.
Do inheritance, if you have inheritance, do the beneficiaries have to pay tax on that? What about an estate tax? Lots of confusion.
Yes,
We're
there
going to clear
is.
up some of those misconceptions. First, a little bit of depth.
Yeah, first we want to look at the estate confusion. We're dealing with a survey from Willful.
Erin Burrs and Dean and Bloomberg. And then she quoted this as part of her interview.
Her quote was that a survey of over 3,000 Canadians showed that most people do not know how much tax we pay on properties or any other asset when we pass away.
Yeah.
So the majority of people out there have no idea what happens when you die, and that leads to this big estate confusion.
And this is from that survey. Willful did the survey. Erin Burrs, who was the CEO and the co-founder of Willful. She did the interview. That's where we're getting this data from, the interviews of Dean and Bloomberg. And some of the stat that we pulled from that survey, 36% of people believe if they inherited a property, they would pay tax on that property. Capital gains.
Exactly.
8% incorrect. They stated they would never pay tax on property inherited, which it may not be the case. And then 13% don't know when they would even pay capital gains on a property. So some confusion. And this is common. Lots of confusion around estates, when inheritance, when you pay taxes. We're going to clear some of that up. The first one, Kevin, you inherit something, you're a beneficiary. Is there a tax on that?
Actually, if you're the beneficiary, no, you do not pay tax as the beneficiary. That's the big news to deal with. None of this is beneficiary tax. Everything basically goes to the estate. The estate will deal with the taxes that go on, and then you'll deal with it from there. Now, this is a Canadian sort of thing. In the U.S., there are some states, Iowa, Kentucky, Pennsylvania, which do have something known as an inheritance tax, which is what everybody assumes that you have. When you die, you have an inheritance tax. No, the beneficiaries do not pay. It is already deemed that, it's going to go to the estate first before anything else happens.
That's a good point. Some of the U.S. states do have an inheritance tax. Maybe that's the source of confusion. Canadians think we have one as well. We don't. So the good news, you inherit money, no worry about tax on that. The state covered the tax. There's a second piece here, and again, looking at the U.S., the U.S. does have a federal estate tax. If your estate's over a certain threshold, they just ding a tax.
Doesn't matter.
Across the country. Do we have something like that in Canada? Technically, no. There is no federal estate tax, but a little more nuanced. There are some taxes, specifically CRA taxes, the income of an estate, and we'll get through that. And then each province has a probate, which could be an additional levy or additional charge. Let's talk about both of those.
Yeah, I mean, when you're dealing with the probate, basically that's just verifying that everything's in order so that we can process this estate going forward, which is where the fees can come in. But yeah, the first one we deal with would be a deemed disposition. Theoretically, when you die, you are deemed to have sold everything you own date of death. So whatever the prices are for everything you've got at that point in time, that is what it's sold at. So if you have gains or anything else that are coming out of it, that is where they're going to make their big scenario. So the real estate you have is considered sold. If you have a cottage property, same thing. All your stocks, bonds, all sold. And that's where they're basing their numbers for figuring out your taxes.
Yeah, again, deemed disposition, it's not physically sold.
No, not physically.
Yeah, but for a tax purpose, they're saying, all right, your cottage, you paid $100,000 with $500,000 now. We're from a tax perspective, assume you sold it at the $500,000 and trigger the capital gains and tax you accordingly. So the deemed disposition is key because that's how CRA will determine how much income you have for that final tax return, and the appropriate level of tax to charge you is going to be based on all the income if you did sell all the stocks, the bonds, the real estate. You mentioned the real estate example. Also important, you talk about RSPs.
That's a big one.
You're deemed to have withdrawn everything. So if you have $200,000 in your RSP, the day you pass away, it's as if you pulled the full $200,000 out and you have $200,000 of income.
Plus whatever you've earned at that point.
Which all has to be taxed. So you can see how this deemed disposition can end up creating a big source of income, which could mean a larger tax bill. On the RSP, if you name your spouse the beneficiary,
you don't worry about it.
Don't worry about it. Tax-free spousal rollover. That is good news. Anybody else,
that's
if it's your brother, your son, it doesn't matter. Anybody that's not the spouse, you're paying the tax, and then it goes on to the beneficiary. We do have a whole video because we encourage people don't die. Well, it's money in RSP. It's very expensive from a tax perspective. There's a strategy in RSP Meltdown. We'll link to that video. But we're just talking deemed disposition here. I said RSP, RIF, LIF, PRIF, pretty much anything that's not the TFS,
the alphabet,
the tax-free one, is going to fall into this category where it's all considered withdrawn, added to income, which means you have a big tax bill. So we talked about inheritance tax. They have that big CRA income deemed disposition, and then the provinces are going to look at probate.
Yeah, and they are. Probate we'll get to, but again, if you want to know anything more about that sort of soup of where you're going to get that tax from, by all means, you go to chatwithclintonandkevin.com. We're more
Absolutely.
than happy to answer questions on anything with this estate confusion or any of the other financial options that you want to deal with. By all means, send us an information on there. Send out the off the
Through the
website.
website.
Do what you can from there. It will go to Clint or I. No robots involved, so we'll be able to deal with it that way, and you'll get the answers you should get. But yeah, as we talk about probate, if I get back to that, probate basically, this is, as I mentioned before, they want to verify that the will and everything else is in order. So you go to different provinces, and different provinces will charge you different amounts. Probate fees are assessed according to the estate's value. And the fees vary, as I mentioned, by provinces, and they tend to increase proportionally by the size of the estate. So, a $30,000 estate may not have any probate fees, but when you start getting to $500,000, $1 million, $2 million, those fees can go up substantially. And as we mentioned, it's different for each one. Now, estates probate can be done by the individual, but most people will usually hire a lawyer. So there may be another cost involved beyond what the probate fee is for hiring the lawyer to do this one.
The lawyer is probably going to want some money.
Exactly.
As well. So just something to keep in mind. Just thinking of cost when it comes to an estate, could be some legal fees in addition to probate, in addition to the tax as it relates to the deemed disposition. So
That's right.
deemed disposition, that was the income side of the equation. That CRA saying, hey, what's all the income for that final tax return? We're going to collect that tax bill. Probate is for the province. It's going to vary by province and territory, and it's going to be a charge based usually on the size of the estate.
That's
I
right.
created a table here. I went through taxtips.ca. They had all the data there, and I went through the formula and I said, let's assume we had a $500,000 estate.
Yep.
I didn't look at legal fees, so this is just the probate. And you can see there's a pretty big variance here, Kevin.
It's
depending
wide.
on where you live. You can have provinces like Manitoba where it's zero, provinces
Perfect place to
like
be.
Alberta or even a territory like Nunavut or Yukon where it's minimal. It's a couple $100 tops. And then you can see the
Ontario,
other
BC, Nova Scotia.
the other end of the spectrum where they're taking 1% to 2% of the estate just for probate. And that could certainly add up.
Yeah, and also to remember that depending on what you have as well, depending on where your assets are, I mean, if you live in Manitoba, theoretically it says you've got zero that you have to pay on the probate. But if you have a cottage at Lake of the Woods in Ontario, well, all of a sudden you may have to get probate done in Ontario, and there may be tax involved on that, specifically because it's not all in the same province. So probate does have that scenario, and as we mentioned, sort of the way it is, we don't really have an estate tax. It's more final tax that goes on, and these are some of the options that we have to look at.
Yeah, so some of the confusion, the first one is their inheritance tax. If a
Right.
beneficiary inherits some money, do they pay tax? No, not in Canada. Some U.S. states, but not in Canada. Is there an estate tax? Technically, no. But there are a few other nuances. The CRA is going to have a final tax return you have to file, and they're going to claim income, and you have the deemed disposition, which could bump up your income. And then the provinces will have probate, which is going to be a charge depending on where you live and where your assets are held on the value of the estate. So there's going to be some cost there. Technically not an estate tax, but certainly going to be some cost and some tax you have to worry about. Can get a little complicated. What would be a good way to handle that complication?
If you're going to handle that complication, what you should do is have a financial plan. That is the biggest one. It's our mantra. Make sure you've gone through the whole process. That will help out with this immensely. People get so confused. If you've set the plan up in advance, your heirs are probably going to be able to run right through this a lot easier than if you're trying to scramble without anything going forward.
Yeah, and the plan usually is not just a financial planner, especially a state officer.
Right.
Like link in a lawyer and accountant just to make sure all the I's are dotted, the T's are crossed. It's very important you have a team that can handle this. We do have another video, as mentioned, probate.
Right.
We just hit the high level, just kind of glossed over the surface of what probate is. We dive in a little more detail on possible ways to avoid probate in this video. So click on that one. We'll see you again very soon.
Take care.